released its house price index and is reporting a rise of 2.4% in real house prices last year. Joining me now to unpack those numbers and to look at what this year has in store for the property sector is Jacques du Toit, sector analyst from Absa Retail Bank. Jacques, thank you so much for joining me today.
Thank you.
Is this a little bit of good news coming through for the property market? Because we have seen perhaps a relatively muted performance over the past year or so.
Yes, no, for sure, especially from a real point of view. For the past 2 years, in 2008 and 2009, we've seen prices actually declining to the tune of well above 6% in real terms. While this year, or actually in 2010, we've seen an increase of 2.4%. But it was also driven by the very low inflation during the course of 2010, which had a major impact on that calculation.
Well, looking at the interest rate environment, we are sitting at a 30-year low on the interest rate front.
That is correct.
Surely that should feed through, and it's really all about the banks extending loans and 100% loans.
Yeah, no, for sure. The interest rate is a very important factor. It impacts quite heavily on the affordability of housing, but one must take into account that the economy has come through some difficult times, and while economic growth has not really performed that well during 2010, we expect growth of around about 2.8% for the year as a whole last year. Interest rates are low, but many consumers are still experiencing quite tight financial conditions in terms of high levels of debt, job losses, and the impact of that on household income working through to the property market.
And you know, it also begs the question as to whether it is a good idea to get into property if property prices are not going to do very much for 2011 as well.
Well, we don't expect prices to increase quite a lot this year. Our forecast is around about 3%, which is really, really low. And taking into account inflation, it will most probably be a case of a slight decline in real terms again. And even over the next year or two, we expect single-digit growth. So when you invest in property, you should take really a longer-term view. I should say 5 years plus at this stage.
So, I mean, is it advisable to buy into property at this point in time?
Well, it depends on from which angle you look at it. If you want to invest in property, you should normally focus on that asset class at the lower end of the cycle. And the cycle has come down during the course of 2010, especially the second half of last year, in terms of prices. So from that point of view, it is not a bad time to
you mentioned
start.
5-year long-term view as well. Do you expect a nice, robust recovery within that period?
Well, not really. We expect price growth to remain in single digits for the next 2 to 3, even 4 years. And not going back to the levels of 20% plus or 30% plus that we've seen in the mid-2000s. That came from a very low level in previous years, and it was to a large extent a period of correction. So we do not expect price growth to move to those levels again.
And just taking a look at the overall property market on a global level, because we are still seeing a lot of pressure in the US, the UK, and one only has to look at the problems coming through in Europe. And then you've also got China that is trying to impose a second tax on homes that are owned by people, in fact second homes that are owned by people. So bubble territory in one area and perhaps muted growth in the other.
Yes, no, for sure. One must take into account that the property market has become a very important sector in the global economy, having an impact on the consumer sector in most of those countries that you've mentioned. And those sectors and those countries are suffering in terms of their macroeconomies, because the consumer is still under pressure in terms of their finances, also very high or higher rates of unemployment currently, and obviously that works through to the macroeconomies, having an impact on the South African macroeconomy, the household sector, and eventually also our property market.
Jacques, I mean, it's quite interesting when you look at the average value of small houses increasing by a nominal 14% in 2010. We saw only a rise of 0.8% year on year in December, but this sector actually outperforming the likes of medium-sized houses and large houses.
Yes, in the first half of last year, the small segment performed really well over 20% up to 30% year on year in some instances. So that had a major impact on the average growth for the year as a whole, while your other two segments performed at a slightly lower rate during the course of next year. But all three categories actually performed not that bad in the first half of the year, where we've seen price growth of around about 11% on average for that period compared to a year ago, while in the second half of the year price growth tapered off to 2.6%. So there was quite a difference between the first quarter or the first half of 2010 and the second half of last year.
And just looking at the lower end of the market, because we know that there's 100% loans available for that kind of market, and also perhaps even 110% home loans in some cases. So perhaps that also plays a big factor, is credit extension.
Yes, no, for sure. When the property market, especially consumer, comes under financial pressure, he focuses on more affordable property, and that is to the lower end of the market, into the smaller property sector. So we do expect that market segment to still perform relatively well over the next years.
What is the property market pricing in terms of the interest rates scenarios in 2011? I mean, there are, of course, a lot of whispers that we could see another rate cut.
Yes, it is not impossible, although our view is that interest rates have come to its lowest level, and that we do not foresee any further cuts during the course of 2011. To a large extent based on high levels of economic growth moving forward, and also an uptick in inflation that we've seen recently.
Let's touch on South African listed property in terms of performance in 2010, a gain of 29.6%, property unit trusts up 25.25%, quite an incredible performance for the whole of last year. Is that one way to get exposure to the property market?
For sure it is. One can always get into direct property investments, buying house or buying into commercial property, while these type of investment vehicles are listed on the JSE, and you buy into listed property, into commercial property, but it is much more spread in terms of your risk and the type of property you get involved in, and it's also much more liquid than direct property investments.
And of course, less of a headache because you don't have to manage your own property.